Hello and welcome to another update video about ADA. So far ADA working out, no change of scenario, pretty much all still within this scenario here where I told you that we would be coming up in a wave 4. Now the wave 4 ended here in this target area. We saw a nice bearish reaction to it, which is all fine as well. We came down as suggested in the previous video to the downside. We then talked about potential to the upside here in a wave 2, and we have two possibilities here. Either the wave 2 is already finished here at the 20 period moving average on the 1 hour chart, found a bearish reaction and is starting to move down. Now that would be a very short wave 2, I can tell you that as well, because it would mean that this wave 2 only retraced, well, okay, to the 38.2% fib level, but I can't really count 3 waves within this, so I'm not yet convinced that this here was already the wave 2. Also, normally the wave 2 would retrace a little bit more. It doesn't need to necessarily, but normally it would retrace a little bit more. Normally to the, at least to the 50% Fibonacci retracement level. The wave 2 is okay at the 38.2, but normally you would expect a little bit more. Yeah, it is just an indicator that would tell us, okay, possibly there is even more to come here. But it doesn't need to, you know, it doesn't need to. It could just be that what we've made here, and we won't know until we break below support at 47.8 cents. But it could just be that this was the wave A, we're moving down in a wave B, and because we are coming down quite strongly in the wave B, we would then expect quite a steep wave C, because it would then be a flat pattern with a high likelihood, because in a flat pattern, the wave B retraces quite a lot, and the wave C is normally quite steep. Now, if this is the case and the 47.8 cent hold, yeah, and we are not breaking below that significantly, then I would expect that we are moving higher in a wave C. And that could go here to the 61.8% Fibonacci retracement level at 52 cents. Yeah, somewhere here between 51.2 and 53.1 cents, with an ideal level at 52 cents, which is the 61.8% Fibonacci retracement level. And it would also be here of this channel that you can see here, or this ascending trend line. It would be the resistance point. So yeah, good chance wave 2 isn't over yet. So there could be more upside and then down. Alternatively, if we lose the 47.6 cent level, then it is very likely that we go down straight away. And we would be following here this roadmap, this 1, 2, 3, 4, 5 pattern. This is provided that we really go below the swing low here at 47.6 cents. And then we would move down in a wave 3, moving up in wave 4, and moving down in a wave 5. Again, what I said to you earlier, I might have to build another layer of waves in here, but I'm not going to make it too complicated now. We're just following the roadmap now. It might just mean at a later stage, I might not just need to bring in another layer of waves, which means we will do another wave 4 up and another wave 5 down. But I don't want to make it too complicated now. I know it is already confusing as it is. For everybody who doesn't deal with Elliott waves on a regular basis, it can be very, very confusing. But if we take a look here at the chart, even just without an Elliott wave view, we can see two things here. First of all, you see that we are coming up here in an ascending channel after a strong downtrend, and you can call that a bear flag. Absolutely, you can call that a bear flag. The alternative is, if I zoom in, you can see this ascending trend line and the other ascending trend line here from this larger channel, and this forms something like an ascending wedge with a breakout here or a fake out. But in the end, it doesn't really matter too much. It means for me that we come down very strongly in a downtrend, an impulsive move down. We're now moving up in a corrective move up, and this would suggest there will be another impulse following, and we could have already started that with this move down. Now, really only here and only above the target level for the purple wave 4 here, which is above 55.2 cents roughly, yeah. Only above that I would consider more thoroughly a potential breakout scenario to the upside. Yeah, so that is what we're looking at here. So far, all going according to plan for ADA. It's holding quite well generally because it has not dropped below this larger yellow target area that we've been talking about for months now, and we finally went into it in May. But it is holding quite well in this target area, and this target area between 29 and 54 cents is sitting between the 88.7% Fibonacci retracement level and the 78.6. This is the area where you would normally, in such an overall correction here, which is a wave 2, which is coming down here, a larger wave 2, you would normally get into this level and then reverse in here and move to the upside. Many altcoins have actually dropped below this target area, have dropped below the 88.7% Fib level, and ADA is holding fairly well. It doesn't necessarily need another low. It has come down low enough, but the structure just doesn't look good, and it would just make the chart much better should we make another lower low compared to the one from the 12th of May, which is below 38.5 cents. Okay, and again, we are currently on high alert here because the correction could literally be over now, imminently. Yeah, we could really be in this turnaround. Of course, I don't know yet. The Elliott wave count would suggest we make another lower low, and that would be my primary expectation. But we are in this turnaround target area. We've spent some time in it, and it just suggests that at any point in time we could start to move up, and therefore we need to be on high alert. And I'll let you know as soon as I see something more bullish emerging from here. So hopefully you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, check out the channel membership and maybe even the trading course I'm offering on morecryptoonline.com. Thanks a lot for watching. Bye bye.